Hey, it's Mack with PriceActionTradingSystem.com, and it's Wednesday. It's August 6th. This will be our chart lesson for today, and we had a really nice trend. Lots of decent entries here. This thing was really strong until maybe around 11 o'clock. It looks like we made our high. Let's just see what time it was. Should have been right in there around 11 or so. Yeah, right at 11 o'clock hour, and we've kind of been trending down since then. You notice we had the overshoot of the upper channel up here. We worked back down to the low side, tried to bounce off of it, it just didn't hold, and we've continued to work lower. Will we retest this high? We'll just have to see, but right now I see a possible channel working down with a possible midline in there. We don't have a lot of price action yet to prove all that out, but it looks fairly valid to me at this point, so we'll just have to see. But um, 2 days in a row, you have more than enough opportunity to be done long before lunchtime. And that's my goal every day, to be done by 10 or 11 o'clock, definitely by lunchtime if I can. So, but let's talk about the trades, and then I want to talk about something else real quickly, and then we'll call it a day today. I did see this possible bigger channel. Notice that we just didn't have a lot of touches off the lower side of it. It seemed to be holding really well at the top, and the midline seemed to be holding really well. So I believe it to be valid, but we spent most of the time in the upper portion of it. But it was a strong trend up today, so that's not completely unexpected. And once we broke through, we did come back up and test it before we headed lower as well. So it could be that we end up with, you can't rule out the fact. Now, this area right here, this 1918, the 1917, 1918 area, you can see right across here. Actually, really from, well, let's just put the line on it. It always makes it easier rather than guessing. But you can see 1916, 1917 and 1918, that was the resistance area for yesterday from lunch to close, and that's come into play today. It tried to act as support. We got a few bounces off of it, and but we've worked back under it now. So it could be just that we're in a range and we had a little overshoot today, and we may trade down the rest of the day. So the only thing that really mattered, though, early where we were trending up. And there's a shorter term channel in here too that I believe is a valid channel, and that's what I was trading off of early. Then you got the break here, a couple of legs up to a new high, and then one more push and the sell-off. So maybe the bigger one here is not, I still think you got to take them to both into account, but sometimes you'll have that, and then you see all of my short-term channels working down that I use before I go long again. And I had that conversation with a trader earlier today, and maybe I'll show his chart and what his question was. But let's talk about the trades first. First trade I saw was right after about 7:30 or so. There's some news that came out around this time too. It wasn't really, earth-shattering news, but maybe it had something to do with it wasn't what I call high volatility news, but maybe it was enough to turn the market. Who knows? Most of you probably know my theory on the news is it doesn't matter. You don't care about, only thing you care about is knowing that the news is coming out. Anything past that we could care less about. So because you can't determine, even if you knew it in advance, you don't know how it's going to affect the market. The only thing that really matters was there's strong support right here, and prices couldn't get through there. And but you didn't really know that at this point right here. Let's go over to what it looked like at that point. You had a huge trend down, and usually a move down that strong, you're generally going to retest that low. So when you actually had a second entry short here, but I don't think you want to take that one. You might have considered going short right here, but that's like at 6:30 or something. So it's earlier than what we usually start. But when you made a lower high here and it broke higher, this bar actually went up the outside first and then turned down and went out the low side. So I liked, it's a big bar. So what I wanted, like doing was when it broke lower, you could just put a stop there. That's getting very close to these lows. So what I like doing was dropping a limit order, a couple of ticks back in here, and you could have gotten filled on that, and then it drops on down, and it was, it did kind of bounce there at that point. And it looked like it might go lower as prices were trying to test this low again, but this support was just too strong. But you got to wait on the right opportunity to go long here. You might have considered taking a second entry long, but I think it's too risky here. Everything's still below the EMA. You're still making lower highs and lower lows. But notice this new low here. It's lower than all these other lows here. And it's a little failed break lower that closed below that support area. And then you come up and you make a little higher high, a higher low, another higher high, and then you get the failed second entry short there. Notice this, pull back first entry, pull back second entry. It fails, so I like going long right there. And off it goes. Quick, easy scalp. You might have even considered this long because that kind of sets up your trend line. But again, it looks more like a trading range, and it's awful close to the top. So, I think it's just kind of risky right here. You got in here, so I don't think you want to risk this one. But then you get the breakout pullback, and look at this big reversal bar. I like that one. If you could get your stop filled, or if not, hopefully maybe a limit order. This moved really fast, so it's a possibility you may not have gotten filled on that one. But if you did, great trade, and that you can ride this all the way up to the other side. And notice it turns down right off the upper side, a measured move from what we originally had here. And also a measured move from this point to this point. So a couple of different ways. And then now's when you want to start drawing your correction lines. This is a bigger correction. And notice you got to close outside here, and then you turn back down and made a new low, and then look at that reversal. Nice reversal. You could have really just gone long on a stop right there because it bounces right off the trend line. It's a big reversal bar. You got a little trap down here. You do have your break of your little channel here. And somebody actually sent me an email. They entered long here first above this bar. But that's your first break. Actually, I think they went long above this bar right here. But you don't have a break of your channel now. No bullet shot, sign of bullets, but you got your break there, and you move to a new low, and you bounce right off that trend line. You've also got the EMA here, and that's the first move below the EMA since way down here at 8:30 or so. And it reverses real quickly, and it goes on up to another new high. And then you got another bigger correction here. So draw your line again. You finally get a close outside right here, a move to a new low. This was a second entry long. The same trader asked me about this one too. Is this one okay? And on my chart, I think it is. On his chart, it wasn't nearly as nice. He didn't have this big bullish bar. I think it's aggressive because you would expect prices to come all the way back to this low again. But it was the first break of your other channel here. And so, I wasn't 100% sure about the bigger channel here. So I played it. I think it's aggressive. But if you didn't take that one, notice that you get this little pullback right here. It touches the EMA. It turns right back up. It actually broke lower first. Just go long right there. And you figure you're going to touch that high. And you might want to use a limit order here. I actually used a limit order here and got filled on it. So, but there's enough room to get out either way, so you could use a stop. It doesn't matter. But sometimes, if I'm not 100% sure on the setup, I'll try to sneak in with a limit order. But it runs all the way up, makes its new high, and then again, you get another correction here, and you wait on that close outside right there, attempt at a retest, and notice how this one does. There's a second entry long right here. I think it's too aggressive. You don't really have a break of this little channel yet. You did go outside it, but it doesn't close outside. It turns back down. But notice how everything's closing above that midline, and then it makes another attempt, and it tries to go lower yet again, and then it reverses right off that line. That's a nice bullish bar. So Um, I looked at this like you got this little low and you tried to test it again, and so I liked going long there with the idea that it's going to test this high again, and it just goes on and makes another high. And the market's been really strong, so I like that one. And even if you didn't take that one, there's a trap here, and you really could have taken this trap here. Notice the new low, first entry short, pull back, second entry short, but it's right there at that important 918 resistance area. So I probably should have marked it green because I like that trade, but I do think it's a little bit aggressive uh, going. Um, so definitely going above that bar, but once you got this bullish one, if you got a break above it, just drop you a limit order. You actually could use a stop, but if just maybe drop you a limit order to see if it comes back and tests that line again, and then when it turns up, and you almost want to go long right here, but I think it's way too close to the high. And by using a limit order here, you get far enough back in this that you can get out before that top, because that's where you get burned a lot of times. You'll come up here and you'll make that high and it'll turn down. Just like right here. Notice how it comes up, makes that, gets right there at that high and then turns down. It did go a tick higher, but you don't have room to get out there, and that's where you get burned. So, uh, but then you get another correction here. You get your close outside, you move to a new low, and guess what? It takes off again. And this is really a repeat pattern of this one. So if I'm going to mark this one green, and that might have made you made it even more tempting to take this one because it's a perfect repeat pattern. But if you don't enter there, you get the chance to enter here on the second entry, and again, it's bouncing off that midline up through there, and look at it go again. And then you get another correction, a close outside. I attempted a new low, but you didn't get one, so I don't think you want to go long there. You might have thought about it because of the support here, but you did get some closes back down, and maybe this line is right here instead. Looking at it now, I kind of like it better there. Now that you've got some more price action. Um, but when you make this higher low and turn back up, I liked going long what above this bar, looking for it to try to make another high again, and it just didn't quite do it. It turns down. You draw that line, you drag it down, it fits right down here, and that's exactly where it turned on the way back down. And there's probably a measured move right here. Here's the first move down. I would call that your first move. And then there's your second one. And it's almost maybe a tick more, but it's close enough for a nice measured leg down. And there's some other measured legs in here as well. I would actually probably call this the first move up. So once you got a correction here, and you might have even started here because really the rally started here, but if you do that, you can see that's exactly a perfect measured move. Let's say you did use this one. And you're looking for that, and you get that one right there. But then you get your second move up for the other portion if you use the whole thing. So I hope that was clear. But I want to show this on the second entries. It never fails. I go over this over and over, but it never fails. Somebody new will come in and they just can't understand second entries, and I think part of the reason is because they think there's some magic thing, and they try to turn them into something real difficult. But notice in this uptrend, every time you make a new high, the count starts over. So on the way up here, your count's 0 right here, first entry. It goes up, it makes a new high, so the count starts over. So the count's 0. It pulls back, that's a first entry. It goes higher, you got a new high, so the count starts over. It pulls back, that's a first entry. Those are all first entries. Makes a new high, pulls back, so when it goes higher here, that's a first entry. Pulls back, so when I say goes higher, it's when the next bar, notice how this bar is lower than this one. And then finally you get a bar here that breaks higher than that one. Notice right here, it was this bar that finally broke higher. So that's what I mean by first entry, or the first attempt to go higher. Here's a new high right here. You're pulling back. You get a bar that goes higher. There's your first entry, you're pulling back, and then this bar was your second entry. Doesn't mean you want to take it, but it is a second entry right there. I think it was better to wait until we got the new low and then go long right there. So just because you see a second entry doesn't mean you always take it either. It's got to be in the right context. So I hope that's clear. And if you're working down, every time you make a new low, you pull back. There's a first entry. It shoots down. It makes a new low. So the count starts over. It pulls back. And here's where it breaks lower. First entry makes a new low, pulls back, keeps pulling back. There's the first bar that breaks lower. First entry. So those were all first entries down through there. You never got a second entry. Sometimes you just don't get one. All right. If you're working higher here, it pulls back. There's a first entry there. It pulls back. So there's a second entry long right there. This high didn't go higher, so it didn't start over. So that was your first break higher, and it didn't make a new high, so it pulls back. And when it broke higher right there, that's your second entry. So it's real simple. But people try to complicate it, and sometimes people don't understand. All a second entry really is two legs. The market moves in twos, so we're looking for two legs of correction, like right here. It's one leg down, then a correction, then the second leg down, and it starts back again. You're moving down. There's the first leg. It moves up. So that's your first correction. So all that's your first leg, and then the second move down is the second leg down, and so there's your second entry. So that's all it is we're just looking for two legs of correction. Right here, you got one leg down, your correction, and then a second leg down. No, it's not a measured leg, but that's because the market's strong, and so you got your two legs of correction, and then off it goes with a trend again. It's really that simple. It's nothing complicated. You're just looking for, every time you make a new low coming down here, you're looking for second entries. That's the first entry right there. You got a new low, it pulls back. That's the first entry. It takes off. You got a new low, it pulls back. That's the first entry. So now you're pulling back right here. This is the first bar that broke lower than a previous bar, so it's a first entry. If you went to a smaller chart, there's actually one leg up, a pull back, and a second leg, and that's what really confuses people. So I'm not even going to talk about that right now. This is on this chart. That's your first entry right there. There's just not a lot of good second entry. And actually, working down here, there's a new low. Pull back. There's your first break lower. It's your first entry short. Pulls back. There's your second entry short. If you'd have been trading, this would have been a pretty good second entry short because it broke higher first and then turned out and went down the other bar, outside the other bar. I would have had a stop right there if I'd have been trading. And that was a quick, easy move. But that's a second entry short right there. Notice the new low. So your count had started over. And when I say new low or new high, I'm not talking about for the day. I'm talking about counting the swings. On the way down, each one of these would have been, notice that's a new low right there. And then it starts correcting, and then it turns down. And there's another new low. So it's zero again. It starts correcting, and then it went lower right there. So that was 0 and then 1. Now you got another new low. So now the count's 0. You're correcting. Still correcting. And then you got your first break lower there. So there's your first entry. So those were all first entries. Now you got a new low here. It starts correcting. And there's your first break lower. So there's your first entry. Then it starts correcting again without making another new swing low. It's still correcting. And when it broke lower right there, there was your second entry short. Boom. That's simple. And look, there's two legs up. That's all there is to it. And, it takes, if you're new at this, it may take you a little while. But I got multiple videos that are free on the website. Multiple videos that are free on YouTube. You just have to search for them. There's so many videos, I don't have the links to them, but if you search, it's there, and it'll help you a lot. So go view those. Go search for them and view them. And but I think what happens is people come in and they just watch the videos and they hear me talking about second entries, but they haven't read the manual or whatever, so they really have no idea what I'm even talking about. So those kind of people are they're going to be a little bit confused, because if you haven't read the manual, you're obviously not going to understand just from watching the videos. Unless you've watched the second entry videos, you're probably going to struggle. So, uh, but anyway, let's see here. There's a couple of things I'm going to pause this. Okay, here's a chart a trader sent me today, and he didn't understand why he got stopped out here. And the odd thing is he's reading this perfectly. He's got the same channel working up I've got working up, the little two-tiered channel. Um, he's got this channel working down. There's been no break of it yet, but yet he went long right there. So that's and all he did, he was reading it right. He just was a little early. Here's your close outside. It turns down, makes a new low, and then turns up. So if he waits and enters here, he enters perfectly and gets to ride this up. And that spot on my chart is right here. And you see it almost looks the same. He went long on the break above that bar. It was a second entry, but understand you had no break of that channel yet and no retest attempt. Same thing here. Then he wrote me back. He says, well, this looks the same way, but I think he had it drawn wrong. Again, you get the close outside, a move to a new low, and then it takes off again. Here it is again. It's the little channel working down. You get the close outside, a retest attempt, and even though it didn't make a new low, it attempted it. But what happens is the bigger pattern here, the EMA and all, it overrode it. The market was just too strong. It couldn't make a new low, so it took off, but it still had the break and the retest attempt first. And then at the very least, you might have waited on the trap, the failed second entry short there. Notice this. This is a new low. Prices are swinging down now. So you pull back your first entry, you pull back, there's a second entry short right there. It fails and turns and goes right out the upside. Just go with it, because that's what you're looking for, traps. This one's a little more aggressive because it's so close to the high, but if you use a limit order, you had plenty of room, and even if on this pullback you were already out before it started pulling back. Real simple. But it takes a while, and that's the other thing I want to talk about. So I'm going to pause it again here for a minute. Okay, another trader wrote to me, and he asked me about, what my thought was on how many second entries with the trend are successful. And my answer is 100% of them if you're reading the price action properly. Again, there's a second entry right here. It fails, but if you were reading the price action properly, you knew it was too early. You had to wait on that little break in the trap, and then you go along. So if you're reading the price action right, like right here, you're moving down first entry, and you get the break, move to a new low, second entry, and it works. So my answer to that is 100%. If you're reading the price action is never wrong. When a trade fails, you've misread something or you misunderstood something. I didn't always agree with that. If you go back and look at my videos a few years ago, you might have heard me talk about, yeah, this looks like a good setup that just failed. Sometimes they fail, but I'm of the opinion now that when they fail, there's a reason. I mean, and I feel that way because I've gotten better at it myself. And understanding, I have a better understanding of price action today than I did 2 or 3 or 4 years ago, or even yesterday, because I still learn something every day. And so that leads me into the next part of this little conversation that I had with this guy. Actually, before I say that, let me say this. I would say if you're just going with a trend and, and pullbacks to two-legged pullbacks to the EMA or trend line, even if you're not reading it right, probably 65 to 75% of them are probably good trades. It's when you get the break and the new low that they sometimes, even that one, even though you had a break there and a new low, you still had a successful two-legged pullback to the EMA that still worked. But that's when they will fail on you, when you get when the market is reversing. Just like up here, let's see, well, that one didn't fail, it still worked before the market turned down. So very few of them fail. They almost always work. So, but when they do fail, so I would say, if you just get with the trend and take every second entry you see that's coming off the EMA or the trend line, you're probably going to get it right 75% of the time. But if you understand how to read the price action and draw your little short-term trend lines, you can improve it to 100%. you may still get it wrong or misread it, but if you're reading it right, it's going to be 100% on those second entries. So um, I hope that makes sense. But that led into the other part of our conversation that got me to thinking. Um, we were basically talking about, um, I got to thinking, I've been doing this for full time, sitting here at my desk probably for 8 years, and I did it part time prior to that. So just assume that I sit here 6 hours a day, and I promise you, I've sat here a lot longer than that. It's really from 7 or 8 in the morning till it closed most of the time. But I'm just going to say but nowadays, I may only spend half that time because I'm usually done by lunch. But let's just say, to be conservative, that I've sat here at this screen for 6 hours every day, every trading day for the last 8 years. Um, if you do the math, 6 hours a day, just assuming there's maybe 240 trading days in the year. I don't know specifically how many there are. I haven't done the math, but I'm saying that's conservative probably as well. So that's 1,440 hours a year that I've got in front of this screen. So let me say that again, that's 1,440 hours a year. And if you multiply that 1,440 times about 8, well, not 80, but times 8 years, that's 11,520 hours of screen time I've got. That's a lot of screen time. But even more importantly than that, even today, I spend an hour going over this chart, doing this review before I do this video. So, but I'm going to tell you this, back when I first started, the first 3 or 4 years, I spent more time studying than I probably did looking at the screen. So if you throw in, on average, another 3 hours a day of study time, and that was not just trading days. That was weekends. Anytime I had some spare time every evening, weekends, sometimes all day, half the day on Saturdays and Sundays, whenever I got a chance. So you could almost double those hours. So not only have I got the 1,440 hours of screen time each year, I've got another probably, 700 or 800 hours of study time, and that's where you really make the improvement. So if you figure up all the hours I've got in front of this screen and studying these charts, it's astronomical. And so a guy comes in here and he's been trading a year and he doesn't think he's as good as he should be. If you take into perspective comparing yourself to me, and there's probably people that have more experience. I mean, there's no probably to it. There are people that have much more experience than I have. And so look what you're going up against. I mean, your year of time is just peanuts. It's nothing. And I can remember thinking I was there, and I was better because I was starting to make money. I'd probably make money most days, and then I'd still have that proverbial mental lapse somewhere along the line. I'd give up a whole week's profit on one stupid trade or one stupid mistake, and when I stopped doing that, that's when I really turned the corner on my trading. But that leads me into another email. And I got this note from a lady this morning, and I'll just read you the note. Hi, Mac. I wanted to drop you a quick note to tell you how clear price action is getting for me. I'm still getting better every day, but it seems that these last few weeks I've improved tremendously. It's great to hear other students are doing well too. Some of the studies I thought I had down to a T, looking back now, I didn't. I've been working at this for a while now. And that is why I wanted to let you know that it has all really clicked for me lately. I also want to tell you I review your videos all the time and listen to your older videos. Compared to your newer ones, it seems like you have gotten better explaining everything. You've always been a great teacher. But anyway, my point being is that here's somebody that's been doing this. I recognize her name. We've talked a lot. We sent a lot of emails. She makes a lot of posts and comments on the website. I know she's been at this a long time, and I know that she felt, I've heard her say many times, I think I understand it, but I think I'm right at the corner. But you think you're there, but you just don't really realize how good at this you can get until you really get there. And so that I hear that a lot. I've been doing this for 2 years, and I know, and I can do it great on sim. I think I know I understand everything we're doing, but when I go live, I just can't get there or whatever. And you're just not ready yet. This is not. I don't know any other way to put it than to say this is an elite business, and you're just not going to get there easily. If it was easy to do, everybody would be doing. If you could get a doctor's degree and be a doctor in a year, a lot more people would be doctors than are doctors. But and the reason there aren't as many doctors is, one, you got to have the skill set for it, so you got to be somewhat intelligent. But most importantly is the time and dedication it takes to it. Most people are not going to put in that time. It's too hard for them. They're not that dedicated to it. They don't want to do. They don't want to be a doctor that bad. And that's the same thing with day traders. They want to be a day trader, but they don't want to be a day trader bad enough to do what it really takes to be a successful day trader, which is years and years and hours, thousands of hours of studying and watching charts and watching prices on a chart. It's that simple. You got to be dedicated to it, and you got to be willing to put in the time, and most people will never do that. They're going to try it for a little while, and they think man, I've given this a year and I haven't got any better. Well, year's nothing. It's a drop in the bucket. Just think about it. If you want to be a brain surgeon, you've got to get your 8 years of college education at a minimum. Then you got to get your additional, then you got to go do your residency, and then you got to do your specialization. And before you make any money at all, you've probably been at it for 10 years. But once they get there, and then they got to go out and build their practice or join another practice, and it takes a while to start. But once they get there, they're rolling in the dollars. And it's the same way day traders. Once you get there, you're rolling in the dollars, but it's not easy to get there. If it were, everybody would be a day trader. This is probably as hard. It's as hard to be a day trader as it is to be a doctor. I'll just put it that way. And it takes about as much or maybe more time depending on, and some people may truly not have the skill set, because a lot of what we do here is mental. But I think you can learn the mental part if you'll not blow your account before you do. And that's why I'm always preaching, stay on the sim. When you can double a sim account, starting a sim account with 10,000, when you can double it trading properly without doubling down and doing all the stupid things that you can do on a sim account that you can't do live because your pockets aren't deep enough. So don't fool yourself either, because that's what happens to a lot of people. They can do it on sim, but they're fooling themselves, and because they're not trading the same way they will trade when they're live. So I hope that makes sense to you. I hope that's clear. But that leads me into one more email I want to share, so I'm going to pause it again. Okay, here's another email I got with an attachment that I'm going to share with you here. And this trader sent me this, and I'll read you his email first. Mack, I spent an hour or so this afternoon reading some of your older articles on your website, and I noticed that there is a common and recurring theme in almost all of them. And that is that trading is difficult and it takes a long time to get good at it. Let me read that again. Common recurring theme, that trading is difficult and it takes a long time to get good at it. I was reminded of something I read a while back, and fortunately I was able to find a copy of it on my computer, and it's called The 38 Steps to Possibly Becoming a Profitable Commodities Trader. I thought I would share this with you since I think you will find it interesting. I don't know which step I'm on, but I know that I've at least realized that becoming a successful trader will take a lot of time and hard work. I started trading the ES a few months ago, and since then I've had many frustrating moments where I truly believe that no one was actually consistently successful at day trading the ES, and that most of those who claim that they were only doing so to promote or sell something I was almost ready to give up because I didn't want to spend my hard-earned money and time on something that might never actually work. Unlike most people in this business, well, I'm not even going to go on to read that. He's just saying that he thinks I'm an honest guy and that I'm telling the truth, and that, and he goes on to say that trading price action is a method that is worth investing potentially years trying to learn and master. And I'd say he gets it. But you know, I still get better today. And I just explained to you earlier how much experience and time and effort I've got at this. And I'm by far the best trader out there. There are people that would blow me out of the water. I'm just a profitable trader at this point, and that's as far as I'd take it. But when I read this, I'd never seen this before. Uh, And I don't know who to even give credit for it. I didn't write these. He sent this to me. He didn't say where he found it. It says written by anonymous trader and published at CTCN. So I don't want to take credit for this or anything because it's not my work. But when I read it, it's just amazing. And what I'll do is I will post this on the uh, I'll post this on the website for our members to read it and if they want to print it or whatever, because I think it is gold. But if you read these, it starts with number one, we accumulate information, buying books, going to seminars and researching. We've been to trade. We consistently lose and donate money. Then we go look for more information. We change to different markets. We go back with our new knowledge. We get beat up again. We lose our confidence. We start to listen to news and other traders. We go back in the market. We keep losing. We switch to another commodity. We search for more information. I mean, it just goes on and on. And as you get down here to the lower, um, you know, you start to learn that the first thing is you have to have rules to trade by that work. You have to stick to them. You have to master your methodology and trading rules. Then you slowly begin to consistently make money. Then you get a little overconfident and the market humbles us. That's exactly what happened to me. I explained that earlier, that I pretty much had it down, but I'd still have these mental lapses where I'd just make a dump and I'd sit there and watch it go against me knowing I should exit, and I'd give up a whole day's profit or even a whole week's profit on one trade, just one dumb trade, when if I just closed it and followed the rules, hey, I'd have lost 2 points, but otherwise I'd been right back in the game. And that's the key. If you stick to the rules and you have a losing trade and you don't let it shake you, you make it right back on the next trade. And so you can still have losers and make money. But it goes on. We continue to learn our lessons. We stop thinking. This is the one I really like. We stop thinking and we simply allow our rules to trade for us. Trading becomes boring but successful, and our trading account continues to grow. I mean, how many times have you heard me say that? If you're still getting excitement from wins and you're getting down and lows from losses, you're not even close. When you start to get this, it becomes boring. It's just another job. I mean, after thousands and thousands of hours of sitting here looking at the screen, it gets boring. But it's how I make a living, and it's easy. It's better than going out and digging ditches or or going sitting 9 to 5 working for somebody else and making half as much. I mean, think about it. If you just come in and make one scalp a day on one contract, that's $50. No, you're not going to get rich. But how long does it take the average worker at McDonald's to make $50? If they're lucky, they're making $8 or $10 an hour. So that's 5 hours of work. You can do that and come in 30 minutes and do that, and you're sitting at your desk at home in your pajamas. So that's another thing that I'm big on, is that putting it into perspective. This is a job. It's a salary. It's not a get rich quick scheme. But if you can come in and make $50 every day for a year, it won't be long that you can make $500 every day. And if you can do that for a year, it won't be long you can make $1,000 every day, and you just continue to build on it, and then eventually you will get rich. But it's not a get rich quick scheme. It's not easy to break into. Most people will give up long before it's time. And I didn't mean to get on my soapbox today, but here I am. But it goes on. We are making money, more money now than we ever dreamed possible. We go on with our lives and accomplish many of the goals we've always dreamed of. Just like thousands of people set out to go to to go to school and be a doctor, a medical doctor every day, and the majority of them flunk out, and only a small percentage make it. It's the same thing with trading. But why do most of those people not make it? Because do not, they're not willing to make the sacrifices. It's a sacrifice to sit here every day and watch this thing knowing you're not making a dime. I mean, you're just looking at prices bounce around and then going afterwards and spending 2 hours studying every pattern, every trade you took, every move, and figuring out why it did what it did. You know, why did it look like it was going down here and then turn back up? If you understand price action, you get this stuff. And why is it trending up all day and now trending down? I don't know why specifically, but I know it's trending down now, and I've got a good channel here and you can see this midline is playing on both sides. It's acting as support and resistance. And you can tell this place here that I marked early this morning off the high of the overnight right there is still coming in play late this afternoon. Why? I don't know why, but if you spend enough time studying it, you start to see these things and you start to understand these things. And no, you're not going to learn in 6 months or 3 months. Those are the ones that really get me. I've been doing this for 6 months, and I just don't think it's possible. No, 6 months is, you ain't even graduated from kindergarten. That's the best way I know to put it. You're not going to learn it. Every now and then, I will take that back. Every now and then, I will get somebody that will come in and buy my manual, and they'll send me an email and say, hey, I've never traded before, and they won't even understand what a buy order is or a sell stop, or they don't understand the difference between a stop order and a limit order. But and they'll read the manual, they'll just follow the rules, and I'll get an email from them. This is like taking candy from a baby. And the reason is because they didn't learn all this crazy stuff that's out there on the internet, and they didn't read all these crazy books that tell you how to trade. And that stuff, I'm telling you, most of everything you will read that's considered gospel in trading is bunk. And you won't understand that until you learn how to read this chart. And once you do, you will understand. People will write to me, hey, have you back tested this? No. Back testing is bunk. You can't back test. There's too many. You can't write a program with all the variabilities of what we do. Only your brain can do this. I don't think you can write an algorithm. In fact, I know you can write some algorithms that can get really close, but nothing can analyze this chart and trade as well as eyeballs and understanding of what's going on and being right there looking at it. And I believe that with all my heart. And so understand that this is a difficult business. It's a difficult skill. It's a learnable skill, but it just takes a long time. And you're not going to learn it overnight, because just as you start to figure out one thing, the market will switch gears a little bit. So it takes almost a year to watch a market go through the different variables and changes that it'll go through. And that's the neatest thing about the market is it'll do something every day, and you'll miss it every day. And just about the time you catch on to it and say, okay, I'm not gonna get fooled that way today, but then it'll change just on a blink. And so the only way to do this, I believe that anybody, and I mean anybody, I know the big time guys, the fund managers and all, they're just trend traders, and they got deep pockets, and all they do is they try to catch the bigger trend, and if it's going up, they buy and they hang on long enough to make money. And if it's going down, they sell and they hold on long enough to make money. And they've got pockets that are big enough to ride out some of the small pullbacks and things. But we can't, as a retail trader, you can't afford to do that. So you got to be right. You got to be exactly right. So you got to be better than those guys. And I think that if you learn price action, you will be better than most of those guys. I still find it hard to believe that some of those guys, the claims they make about, what their expectations are, and I find it hard to believe that. But now that I know what I know that you can learn to read this chart. You can learn to, with a high probability, determine where it's going for the next 4 ticks. And that's all we got to know. Where is it going for the next 4 ticks? And if you can do that consistently, you can eventually get rich, although this is not a get rich quick scheme. So that's 45 minutes worth. I'm done for the day. I hope this was helpful to you. Um, I'm going to wrap it up. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.